What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 1st of 2021. Well, folks, I hope you're having a great start to the month wherever you are, and in today's video, we've got to dive in to the exciting and exhilarating price action we've been seeing in Ethereum over the past couple of days and weeks, not only in terms of dollars as it's reaching back towards its previous all-time highs, but along with that as well, Ethereum has now hit its highest point against Bitcoin in over 3.5 years, as far back as May of 2018. This is an incredibly significant moment for Ethereum, and it looks like Ethereum has finally set the foundation for its next second wave within the existing bull market. The question remains, though, how far can it climb? How far can we really go here? We're going to try to set some reasonable expectations here throughout the video. And outside of that as well, if you're interested after the price analysis, I wanted to spend some time to talk about a really interesting or maybe potential scaling solution for Ethereum to get more people from layer 1 to layer 2. This is going to be one of the biggest challenges for Ethereum to overcome, and I came up with an idea last night that I thought would just be an interesting thing to talk about here on the channel. A little different than usual, but if you're here mainly for the price action, have no fear. That's what we're going to dive into right now. So as many of you know, if you've been following the channel for some time, we've been bullish on Ethereum against Bitcoin for a long time. We were talking about Ethereum back when it was around $80 to $100, that it was in the golden buy range here. We wrote about it in the Dash report. We talked about it on the channel. It's something that we've been very vehement about, how Ethereum is going to continue to thrive as DeFi and a variety of other use cases that we didn't see, like NFTs and the metaverse, continue to flurry throughout the next bull market. And what's so great is that we took that flipping stance here back here in September, and since then, Ethereum has continued to climb here towards 380% against Bitcoin, a massive move here over the past couple of years, considering the fact that Bitcoin has already made insurmountable moves in price action. So this is an improvement on top of the performance of Bitcoin. And along with that as well, a lot of people were very fearful back in May when we had the pullback, the cool down in Ethereum's price, the dramatic decline from $4,000 to $2,000. And what's really important to note is that Ethereum held up incredibly well here. And that's why, again, we were confident on Ethereum, right? We bought the dip, in this case, around 2000. And what's so nice is since then against Bitcoin, we've been seeing nothing but slightly higher lows here, showcasing that the bulls are in the lead here. They're maintaining the trend here. They're paying a premium in price to be able to drive things up higher and really set up the foundation here after clearing through this resistance for the next second wave. So what are some targets we could look for here? I think this is the most important chart you guys could be looking at. I know a lot of people want to look at dollar terms. We need to look at how it's performing against Bitcoin because we want to be able to outpace the status quo. We want to be able to outpace the safest asset in the market, right? So can Ethereum do that? Absolutely. What are some expectations? We're going to go ahead and talk about 3 scenarios here. No one's got a magic wand that's going to tell you exactly how it's going to go, but there are 3 general expectations we could set as we look at the long-term chart. All right. The first one here is the pessimistic take, right? Now, the pessimistic take is even still an optimistic one or a positive one. It's the idea that we would come back up here in a couple of weeks and be able to revisit back up towards the previous relative highs in January 2018, the peak of the previous altcoin cycle that closed off the bull market back in 2017 and early 2018, right? So that's the kind of, in my opinion, the worst case scenario here when we're looking at the market metrics. Now, of course, there is a fourth worst case scenario or a fourth option that we're not going to talk about, which is that Ethereum could just dump or sell off or go down. But generally speaking, the technical formation here doesn't look like that's going to happen. We're still well into the bull market. It's much more likely Ethereum's going to climb. Okay, so that's the kind of like more kind of pessimistic scenario. What's more of a neutral scenario here in the market? A neutral scenario would be over a longer term time frame that we would come up and revisit the previous all-time highs here for Ethereum in price action, right? That we would come back up here and see the previous highs that were established in June of 2017 against Bitcoin, right? And this would put us up at 0.15 BTC per Ethereum, right? The highest point we've seen in history. Now, I think a retest of that is very reasonable. And I think that this is what we should probably shoot for. I always like to kind of shoot in the middle. But if Ethereum really does mean to scale, in this case, if we really get more people migrating to layer 2 and getting gas costs down, if we get the full merge for Ethereum to ETH 2.0 and we start getting sharding working properly to increase scalability on chain, and we maintain composability, Ethereum could be setting up the foundation to be able to set out new all-time highs. against Bitcoin. And this is a scenario, again, I want to be very conservative on, right? This is really not the likely scenario, but it could very well happen. We've seen stuff like this in crypto, and it is the idea that Ethereum would not just be up 37%, not 75%, but potentially upwards of, I would probably say here in this case, around 100%, right? Now, again, this is going into uncharted territory, right? This range can vary dramatically. This is when things get parabolic, euphoric. There are no market metrics that matter at that point because things are just absolutely crazy, right? So if this scenario does play out, again, things could really get crazy. We're in price discovery mode. We have no previous price action to work with at this point. Where could things go, right? And I would say that if you're going to get this kind of increase in price, it's going to take a good amount of time, right? And again, ignore the time frame analysis here. Again, just note that what my point is here is that as we get higher and higher levels, it's generally going to take more time. It's going to generally take more time here for that kind of return in the market, especially compared to last time. It's not going to be as quick, right? As we've seen here very clearly in this market, rather than the rallies we had back here versus what we've had here. A lot slower momentum against Bitcoin. But the reason I think we could reach this range here is because Ethereum is in a much better fundamental position and has much more demand as an asset versus back here. It has a better monetary policy against Bitcoin, as we've emphasized here. Ethereum going through EIP 1559, which is starting to make ETH more deflationary. It's burning some of the supply. When we simulate the merge to proof of stake, the yearly issuance on Ethereum is going to drop dramatically. It doesn't matter if we were to still drop the gas consumption on layer 1, we would still be at neutral or negative territory in most predictive models. And that is an incredibly significant thing, because Ethereum being the second largest cryptocurrency at this current state, right? And having this much demand for digital assets like we've been seeing, or we can see it in price here, right, is setting the foundation for Ethereum to completely explode in price, especially if the fundamental use is able to continue maintaining and growing with the adoption of layer 2, right? So I digress on it again. You can agree or disagree on the kind of like principles of ETH staking and what EIP 1559 will do. Either way, there's really no debate about it. These are deflationary pressures. They are buy-side pressures. They resist and prevent sell-side pressures. People are staking ETH, and as ETH is getting burnt and taken out of the supply, right? All of this is a positive net negative for prices we've been talking about for the last couple months, right? But again, I don't want to ramble on too much about the fundamental supply and demand elements of it. Again, we can see it being reflected in price. Right, we talked again about Ethereum coming down, making 4,000 support. It bounced off steadily this past week here and is now up towards $4,700, pressing up towards those previous all-time highs. So we talked about those models here, about where we could go in the sense of terms against Bitcoin. But what are some predictive ranges we could look for in terms of ETH's price? Well, we're generally looking at all of these models in Ethereum outpacing Bitcoin, right, in some capacity over the next coming months. But we don't know exactly if it's going to be that it's setting its all-time highs when Bitcoin is setting its all-time highs. And it's likely that that's not going to be the case. So we can't just take our estimations of performance on Bitcoin and then basically increase it by the fixed percentage that we have on those target models, right? So what we have to do is look for some relatively recent or decent price tags, right? We have no price to work with here. We're about to enter into price discovery mode. But I want to go ahead and talk about what's most important here, and that is the key mental, psychological levels that humans look out for. We like big, even numbers as people. We are a little bit weird like that, but we love even numbers for some reason, right? And when you reach 100,000 subscribers on YouTube, it's a big deal. YouTube sends you a silver button, right? There's so many things in life. Everyone wants to be a millionaire, not a $999,999 right? You get my point. So it's an important thing with markets here to look for those big key interval levels, not at the 10 or 20, like every $10 interval or $100 interval, but in the case of Ethereum's price at $4,700, when we reach 5,000, when we reach 10,000, when we reach 20,000. And these are the kind of targets I want to talk about here. These kind of $5,000 chunk intervals for Ethereum, because as it continues to grow and as we're expecting Bitcoin to grow and Ethereum to outpace it, we can easily reach from this point on price tags like, for example, $10,000. We're going to go ahead and hop to logarithmic chart so we can actually break this down. You'll see how reasonable this is in the sense of Ethereum's historical performance, okay? So the first one here would be going up towards 10,000, right? Little over 100% move here in price action. Really great return here. We'd probably see that in a shorter period of time, probably latest Q1 of 2022, right? Could be even sooner than that as things really start to go vertical. Right? But everyone has varying opinions on the time frame. That's not really the focus here. The idea is that sooner or later we're going to be able to reach 100% for Ethereum's price. That's the pessimistic one for the cycle peak. I would say much more realistically, we're going to see here a rally towards 15,000, right, in the cycle, a doubling of that, right, because we're going up another $5,000 interval, and then really the optimistic scenario that people are shooting for. And I think this is, again, if everything goes perfect for Ethereum, if we get that opportunity to be able to get ETH2 launched properly, people using rollups, whether it be zero knowledge rollups or optimistic rollups, generally quote unquote layer 2 solutions, we could see a $20,000 Ethereum in this cycle, right? And I know it sounds crazy, but when you look at the logarithmic chart, we've seen these kind of percentage returns before. We've had, for example, from back here, I can even, just for context sake, just like a year over year, right? I'll even remove some of this positive price action, go straight to the beginning of January, right? To where we are here today. It's been a 620% move. Even our most optimistic scenario is half of that. I think it's very reasonable we could see these kind of price levels somewhere between our neutral and optimistic target. To play it safe, I would say that we've got a really, really solid steady stream of price action for Ethereum ahead of us. But the key thing to understand is that there are going to be periods of this cycle where Ethereum outpaces Bitcoin, which makes these higher targets reasonable. But it doesn't mean that Ethereum could go to 500% or 1,000% in this cycle from where we are, because just because Bitcoin is going to 200K, and from where we're at now, that's about like a 3x, a little over 3x in price. It doesn't mean that you can just take that and then take our expansion targets that we have here on the ETH to BTC ratio, because there will be periods earlier on where Ethereum outpaces Bitcoin. There'll be periods where it declines against Bitcoin. I think reasonably getting it at $20,000 is definitely, there's a surefire chance we could get it, right? So anyways, I digress on it. I wanted to go ahead and talk about a big picture thing here as well, which is that if we do get that optimistic target, if we start to go on the ratio towards 0.17 BTC per ETH, right? Again, just to kind of highlight it here, right? This 100% target. If we get that, we could very well be in a position where Ethereum market dominance flips Bitcoin. The flippening, as you might have heard about it before. And this is what it sounds like, guys. It's the idea that Ethereum's market cap, whether it be for a short while or the long run, would flip Bitcoins. Ethereum would become the largest cryptocurrency. Now, we've seen this kind of activity before for flipping. People, XRP flipped ETH at one time in 2017. We've seen, for example, I think there was BSV had flipped Ethereum to be the second largest crypto, and it was looking like it was going to flip Bitcoin way back in the day. Or I think it was Bitcoin Cash, sorry. But now we could see something we've never seen before, which would be Ethereum surpassing Bitcoin. A cryptocurrency surpassing Bitcoin in general has never happened before, at least not in the past couple of years. This is an incredibly interesting macro event. The volatility, the excitement in the market that would happen if something like this came true. I mean, this is, I don't know, it's a really exciting thing here. It's good to see Ethereum confidence, Ethereum's confidence levels high, people realizing the fundamental value propositions of Ethereum. There's so much being built on Ethereum as a chain. And along with this, well, there's a lot of other layer ones. I don't want to be negative on other layer one solutions. We're invested in some. We support many various ecosystems. But Ethereum, at the end of the day, when it comes to developers, building, demand for the on-chain activity, Ethereum is king by far. You can complain about gas fees. We can talk about that as we will later on. But Ethereum is the king here. And to see it, garner and increase the dominance here, this is the ETH BTC. the ETH to Bitcoin dominance ratio, I think we could easily see something like this within the cycle. Something really, really incredible, right? Especially if ETH makes one of these upper end moves against Bitcoin. Now, let's go ahead and actually talk about something. And I just wanted to share here, if you guys are interested in this kind of macro analysis, we're about to drop the latest version of the Dash report. You guys are welcome to check that down below in the description. It's a newsletter that I write where I go through cryptocurrency markets, go through equities, commodities, Forex. I try to give the whole macro picture of investment opportunities that I see in the market. And it's something that we've got a lot of people from the Data Dash community participating in. You get a discussion group where you can talk to other members of the report. You get my percentage portfolio allocation for my investment portfolio, all kinds of different things like that you can dive into. So if you guys are interested, check out the link down below in the description if you want to learn more. But I want to go ahead and talk about this tweet that I put out last night. I got a little bit of an idea in my head as I was wrapping up the newsletter, and it was this idea of, could we scale Ethereum in a unique way? There's a big problem right now, which is Ethereum's community has this idea of taking all the existing users on layer 1 and moving them over towards layer 2 solutions, or at least giving them the capability to in order to reduce gas costs and further scale the network. This is utilizing generally two forms of technologies, generally known as rollups. We have zero-knowledge rollups or ZK rollups, as well as optimistic rollups. I'm not really here to talk about the difference between these two technologies. Both of them add very high degrees of scalability. They have their pros and their cons, and they're both improving as technologies over time. But what I do want to focus on is the problem that Ethereum currently has, right? We've been talking so much about the positive price action for Ethereum, but what we've struggled with is how do we actually scale Ethereum in the long run? This is still a problem to this day. It's improving, but it's still a problem. Gas fees are relatively high still. And the cost of gas is high, but we also have to worry about the increasing price of Ethereum, which makes that even worse, right? So this has made Ethereum unusable for a lot of people. Now, the biggest problem Ethereum's had is getting all these people from layer 1 to layer 2. There's little to no incentive right now. It can be expensive to bridge, so people ask, why would I even participate in that? Why would I move my existing layer 1 assets to layer 2, right? So people end up making swaps. They end up still doing gas-intensive activities here on layer 1. A proposed solution I wanted to give, and it could be far out, it could be something that may not even be practical or might take too much time, or also might tailor in with the ethos of blockchain being open and permissionless for all types of activities. I wanted to propose an idea that the Ethereum network would set aside a portion of the entire block size, right, that Ethereum generates in a fixed time interval, right, a relatively fixed time interval. We would set aside a certain amount of block capacity or data storage within each block for activities like bridging between layer 1 and layer 2 protocols, whether it be going from layer 1 to layer 2 or from layer 2 to layer 1. We could generally work it out either way. But the idea for this example would be that we'd set aside 20% of block capacity for only bridging transactions. Now, what would this do for the cost of migration? And also, what would it do for the general Ethereum network? Well, it would have two general trade-offs here, from my understanding. It would make layer 1 a little bit more expensive to use in the relative term, as you're generally limiting and contracting the amount of block space for on-chain activities. But along with that as well, you'd have 20% of the block that would have a different gas price. You'd have one that would be dramatically cheap, making bridging incredibly cheap on-chain. And the reason why is because in order to get, and this is just our hypothetical example, the number is really kind of up in the air, you could change it as you like. Having 20%, even 10 or 5% of block space for only bridging transactions would make the price of gas, or GWEI, go down dramatically low, right? So you have two separate fee markets. You've got fees for transactions in order to just do any kind of transaction you want on layer 1. But if I'm interacting and conducting a bridging transaction towards Optimism or towards Arbitrum or other certified roll-up providers, right? We know their addresses on chain. Then in this case, we would start to see the ability to bridge at a really cheap cost. So I want to go ahead and kind of visualize this here. So I've got my very fourth grader level drawing here, because I'm not an artist by any means. It's not meant to just oversimplify things. I'm just not very good at drawing on the go. But I wanted to go ahead and try to use some visualizations to kind of clear out this idea, right? So when transactions are broadcasted, let's say you sent a swap transaction through Uniswap, or you wanted to send a amount of ETH or ERC20 tokens from your wallet towards an exchange wallet or a friend's wallet. Those transactions show up within what's known as the mempool. This is the same exact mempool. Well, they're separate mempools, but it's the same concept as transactions that get broadcasted on the Bitcoin network or the Litecoin network. You generally send them towards a mempool. They're a pool of pending transactions that have not been confirmed and stored into a block on chain. Miners, what they will do is the ones who validate blocks and confirm transactions in order to receive not only fees, but also block rewards. What they do is they listen out for transactions in the pool and they pull them back into a block, okay? So they're listening out for the mempool, they're pulling in these transaction requests that have been signed by users, they've signed their private key, the signature is on the transaction, and now they're looking to fit this into a block. Now, generally speaking, blocks are limited to some capacity, right? Let's say hypothetically, depending on the chain, you'll get different levels. Let's say you've got 1 megabyte of information that you can store within a block. And a miner can only store so much data within these blocks, and that's why there's a cost to it, right? In order to prioritize your transaction over another, right? So people pay GUE or gas in this case in order to do that, right? So we generally have our 1 megabyte block. Now at the moment, it's really full. Blocks are generally used at full capacity here, right? And because of that, cost of gas can be quite high, all right? So this disincentivizes people from bridging from layer 1 to layer 2. But what if for a moment, right, we set aside 20% of the block here, right? This whole element of the block, 20% of the available data space would go towards only bridging transactions. This would start to bring the cost of bridging dramatically lower, right? So what would originally possibly cost, probably right now, anywhere from 20, 30, 40, 50 bucks, would now cost a couple of cents, $1 at most. The price of GUE would go down at dramatically, or the measurement, in this case, the cost of gas, or GUE, would go down dramatically. And what we could do is get more people from layer 1 starting to engage in bridging transactions, taking load off of layer 1 to where we can eventually expand this amount of bridging-based transactions on the block size. And we'll have layer 1 mainly being utilized by these roll-up providers, right? The idea here is that you can basically do more activity on a layer 2 and still have the security and finalization of storing that data on chain on layer 1, right? So again, whether you're using ZK Sync, whether you're using optimistic rollups, it's utilizing the security of layer 1, right, for finality, but you're able to do much more on layer 2. That's the whole benefit here, and it's how we're able to see 95% reductions, 90, 95%, 98% reductions on layer 1 activities when they're conducted on layer 2. Imagine for a moment if we could get enough people on layer 2 utilizing this beneficial technology to where we could start to really get a load off of the layer 1 blocks, leave that open for the rollups, and now gas costs could really start to go down. That's the idea here. And the really interesting thing, and I was thinking about this technically, is this even possible? Well, technically, we know the gateway addresses here, the contracts for Optimism, right? This is the bridge here that's storing 26,000 Ethereum here, $124 million plus the $85 million in ERC20 tokens. There might be other addresses here, but this is one of the bridges here from Optimism. And as you click on the bridge label here on Etherscan, we can see that we have the the bridge here for ETH to DAI. We have the Uniswap bridge. We have the AnySwap BCS bridge. You have all these bridges here that are available here for other types of side chains, layer 2s. Again, I think we'd have to determine what's our standard here. Are we only going to allow for roll-ups to maintain decentralization? Are we going to participate in allowing for side chains as well? That's where the issues might arise. But either way, if we can build this framework in to take load off of layer 1 and make it as simple and cost efficient for people to move from layer 1 to layer 2, I gotta tell you guys, whether it be myself or other users, I think a heck of a lot of people would engage in it. And if you gave some incentives on top of that for people to participate in layer 2 ecosystems, I think it's an easy challenge to overcome. And it would just be a matter of time before ETH's gas fees would start to climb down dramatically. But again, I'm open to any feedback. I think the one big criticism of this is, first off, how do we really determine what bridges are we going to accept? I would say that the standard, it's pretty easy, would be you'd probably have a standard at rollups, because I think that's what the Ethereum community really wants to see long term. But outside of that as well, the really big question here is whether or not we contract blocks, the block size even more for just every other day type transactions on layer 1. And I think, again, Ethereum as a community is going to have to make this choice, because ETH layer 1 is completely unusable, right? It is really unusable for everyday people. I got to say it, guys. Yeah, people say, oh, it's unusable, but everyone's paying high gas fees and using it. Well, that's not everyday people. And I have to tell you, as someone who's built a consumer application for everyday people, paying $50, $70 gas fees, if not more, around $100 to $120 is completely impractical. It's worse than centralized exchanges. At that point, they should just go on and use a centralized exchange, right? So my point to this is that Ethereum's got to make a move sooner rather than later. And back to our point about talking about price action, if Ethereum really wants to materialize and get this kind of gain in price, it's going to need the next wave of users. It's going to need the next wave of adoption. And it's going to need to find a way to reduce its gas cost in the long run. So anyways, just my thoughts. I'd love to hear from you guys. If you could, share this video around in the Ethereum ecosystem. Reach out to a lot of the people out there who've got a voice in the Ethereum ecosystem much more than I do. I'd love to get this conversation going. And if the idea just doesn't make sense, it's perfectly cool. But I would love to see if this could actually get some traction and help out the Ethereum network to scale long term. Anyways, that's enough rambling for me, guys. You've listened to me long enough. Thank you all so much for listening in. If you like this video, drop a like. If you want to check out the Dash report, check it down below in the description. And until the next video, I'll see you all in the next one. Take care, everyone.